that special, as what Doug just explained, is that it takes one variable out of the equation. Right? In the other markets, people can do what's called a short sell, which means they are betting on the currency or whatever they're trading, the equity, to go down, which at times it creates extra confusion, sometimes extra volatility, extra chaos, because certain bigger players can push the market around. They can push it up, take profits, push it down, take profits. So in theory, it gives us a little bit better of an edge that there's only buys that are, you have to buy and the market has to go up for you to profit from. And if people are selling, they are closing their positions and taking profits. Or if they bought too high, they're taking losses to get back in at a lower level. So really people are looking for what's the next place to buy for as long as a currency will be viable. So it gives us a little bit of an advantage, especially when Doug kind of recaps how we approach the market and how we look to get into it.
But that aside, guys, there's no shortage of opportunities, right? There will be another opportunity. There's in the markets, right, where anything is traded, there's no end, right? You just might have missed this particular move, and that's okay. The important point is to recognize when opportunities worked out, why they worked out, learn from it. Don't chase the market would be my this motto that everybody who's traded for a while knows, right? If you feel like you missed an opportunity, probably not the best time to get into it. Probably the time to look for, well, hey, when's the next setup? When's the next setup in this particular coin? When's the next setup in a different coin? That's okay.
But the key here is that none of them turned and challenged this big red candle here, okay? So there was no real up pressure. There was definitely a point in the market that it hesitated. Some people took profit, but there was really no demand that came in. Now the difference between supply and demand, right? Demand is a lot of buyers coming in wanting to take the market a direction. Supply is a lot of supply, a lot of coins or a lot of product, but a lot of coins in this case that are still available driving the market down. The more supply we have with less demand, the market goes down. The greater the demand, the less the supply, the market goes up. So what we're trying to find when we define these zones, when we begin to look for these, is where did demand really come in?
Now we don't really use the traditional indicators. We have in the past over the years, and what we found is the majority of them are lagging. Also, I think a lot of the bigger money know what those indicators are doing, so they're watching those and maybe timing some of their entries, and they can use those for profit taking and traps for the less experienced. So we focus on price and volume, and as Doug said, as we factor in the social sentiment, we'll have a little extra edge there as well. But price and volume generally tell the story, especially the more depth of volume that Doug's talking about, the level 2, the specific amount of currencies in this case. It used to be contracts, but the specific amount of currencies trading at certain price levels tell us a lot about what's going on.
But this is a great sign for me to find a barrier. This is the kind of barrier I'm looking for. I have a high volume failure. I've got a confirmation that we're trying to go up. I get a pullback to that high volume failure. I'm in that trade. That is the bottom of the move. Okay? That is the trade. That's the best trade on this page right now.
When Doug's saying barrier, guys, that's where the market held before. In this case, he's talking about a support barrier, which is where the buyers held the market, came back in. And if it's in the reverse, where the sellers take control, then that's resistance. In this case, he's talking about support barrier. As you can see, right, support, basically more buyer. People were interested in buying again at that level. You know, if you think about it like an auction, that's what this is how that market operates, right? So the more people that come in and want to buy it, supply and demand, more buyers, more the price will go up, more, you know, people selling out, the price will go down.